Let's talk about investing. It's a topic that can seem daunting to many, often shrouded in mystery and complexity. It can seem scary, like a game only experts can win. The constant stream of financial news, the jargon, and the volatile market movements can be overwhelming. But I'm here to tell you that's not true. Investing doesn't have to be intimidating or reserved for the elite. My name is Peter Lynch, and I've spent years in the stock market. Over my career, I've managed one of the most successful mutual funds in history. I've learned that anyone can be a successful investor, even without a fancy degree. You don't need to be a financial wizard or have insider knowledge. You see, most people think you need to be a Wall Street hotshot to make money in stocks. They believe it's a realm only accessible to those with deep pockets and advanced degrees. They think it's all about predicting the future, timing the market perfectly, and taking big risks. This perception creates a barrier, making ordinary people hesitant to invest, but that's not how I see it. My approach to investing is much more grounded and accessible. My approach is much simpler, and it's based on a powerful idea. You already have what it takes to succeed in the stock market. You don't need to be a genius or have a crystal ball, you just need to know where to look. By leveraging your own experiences and knowledge, you can identify great investment opportunities. It's about understanding the companies you invest in and having the patience to see your investments grow. Investing is not about quick wins or gambling on the next big thing. It's about making informed decisions and staying committed for the long term. Remember, the stock market is a tool for building wealth over time. With the right mindset and approach, anyone can become a successful investor. So let's embark on this journey together. Let's demystify investing and unlock the potential within you to achieve financial success. Here's the secret. You have a natural advantage in investing and you use it every day without even realizing it. Think about it. You know things. You understand things about the world around you that others might miss. Maybe you're a teacher and you see firsthand which educational software programs kids love. Or perhaps you're a car enthusiast and you can spot a promising new electric vehicle model a mile away. This is valuable knowledge. This isn't rocket science. It's about paying attention to the things you encounter every day and recognizing the investment opportunities they present. You don't need to be an expert in everything. You just need to be an expert in your own life. Now let's talk about what makes a company's stock go up or down earnings. Earnings are simply the profits a company makes. When a company's earnings grow, its stock price tends to follow. It's like a law of nature. Think of it like a tree. The earnings are the roots. If the roots are strong and growing, the tree will flourish. But if the roots are weak, the tree will struggle to survive. Don't get caught up in complicated financial jargon or market noise. Focus on the fundamentals. Is the company making money? Are its earnings growing? If the answer is yes, you're on the right track. One of my golden rules is this. If you can't explain a company's business model to a 10-year-old in 2 minutes or less, don't invest in it. It's that simple. Investing doesn't have to be complicated. If you find yourself getting lost in technical analysis or industry jargon, take a step back. The best investments are often in companies that are easy to understand. Remember, you're looking for good businesses, not complex equations. If you can't explain what a company does and how it makes money in plain English, it's probably not a good fit for you. Section 5, Lynch's Eureka Moments, from pantyhose to donuts. In this section, we delve into the fascinating world of investment opportunities that can arise from the most unexpected places. Sometimes the best investment ideas come from everyday experiences and observations. Let me give you some examples from my own experience. These stories illustrate how keeping an open mind and being observant can lead to profitable investments. One day my wife came home raving about a new brand of pantyhose that seemed to last forever. This piqued my interest. She was so enthusiastic about the product's durability and comfort that I couldn't help but wonder about the company behind it. I did some research and discovered that the company behind this miracle hosiery was called Hanes. Hanes had a reputation for producing high-quality products, and their innovative approach to hosiery was clearly resonating with consumers. I liked what I saw, a company making a quality product that people loved, so I invested. The more I learned about Hanes, the more confident I became in my decision. Their commitment to quality and customer satisfaction was evident in their growing market share. And guess what? Hanes' stock soared. My investment paid off handsomely, and it all started with a simple observation about a product my wife loved. Another time I was traveling and kept noticing these La Quinta motels popping up everywhere. They seemed to be strategically located in convenient spots, catering to travelers like myself. They were clean, comfortable, and reasonably priced. I decided to stay at one to see for myself, and I was impressed by the quality of service and the overall experience. I realized this company was onto something. Their business model was solid, and they were meeting a real need in the market. I saw potential for growth and decided to dig deeper into their financials and market strategy. Again I invested, and again I was rewarded. La Quinta's stock performed exceptionally well, and my investment grew significantly. It was another example of how paying attention to everyday details can lead to lucrative opportunities. The point is, investment opportunities are everywhere. They can come from the most mundane aspects of daily life. Whether it's a product your spouse loves or a hotel chain you notice while traveling, there are countless opportunities waiting to be discovered. You just need to keep your eyes open and trust your instincts. By staying curious and observant, you can uncover hidden gems in the market. Remember, the key to successful investing often lies in the details that others might overlook, so always be on the lookout for your next eureka moment. Section 6. The long game patience pays off in the stock market. Now let's talk about time. Time is an essential element in the world of investing, and understanding its importance can make a significant difference in your financial journey. The stock market is not a get-rich-quick scheme. Many people enter the market with the hope of making quick profits. But this mindset often leads to disappointment and losses. Instead, successful investors understand that building wealth through the stock market requires patience and a long-term perspective. It's a marathon, not a sprint. Just like marathon runners train for months or even years to build their endurance and strength, investors need to be prepared for the long haul. This means staying committed to your investment strategy even when the market experiences volatility. The key is to find good companies and hold on to their stock for the long haul. Research and due diligence are crucial in identifying companies with strong fundamentals, solid management, and growth potential. Once you've made your investment, it's important to stay informed about the company's performance and industry trends, but avoid the temptation to make impulsive decisions based on short-term market fluctuations. Think of it like planting a tree. When you plant a sapling, you don't expect it to grow into a towering tree overnight. It takes time, care, and the right conditions for the tree to thrive. Similarly, your investments need time to grow and reach their full potential. You wouldn't dig it up every few weeks to see if it's growing, would you? Of course not. Constantly checking on your investments and making frequent changes can be detrimental to your long-term success. Instead, focus on nurturing your portfolio by making informed decisions and allowing your investments the time they need to grow. You'd give it time to take root and flourish. Just as a gardener provides water, sunlight, and nutrients to help a plant grow, you should provide your investments with the right conditions to succeed. This includes diversifying your portfolio, staying informed about market trends, and being patient. The same goes for investing. Building a successful investment portfolio takes time, effort, and a long-term perspective. By staying committed to your strategy and avoiding the urge to make impulsive decisions, you can increase your chances of achieving your financial goals. Don't panic and sell your stocks at the first sign of a market downturn. Market fluctuations are a natural part of investing, and reacting emotionally to short-term changes can lead to poor decision-making. Instead, focus on the bigger picture and remember that the stock market has historically trended upward over the long term. Remember, you're in it for the long haul. Staying calm and composed during market downturns can help you avoid making rash decisions that could negatively impact your portfolio. Trust in your research and the strength of your investments, and give them the time they need to recover and grow. Ride out the storms and you'll be amazed at how your investments grow over time. Just as a tree stands tall through different seasons, your investments can weather market fluctuations and emerge stronger. By maintaining a long-term perspective and staying committed to your strategy, you can achieve financial success and watch your investments flourish. Section 7, David versus Goliath, why small investors have the edge. You might be thinking, but Peter, what chance do I have against the big Wall Street firms with their armies of analysts and supercomputers? And it's a fair question, but here's the thing. You have a secret weapon. You see, big institutions are often limited in what they can invest in. They have rules and regulations that prevent them from taking risks on smaller, lesser-known companies. But you have the freedom to explore. You can be nimble, agile, and opportunistic. You can invest in companies that are just starting out, companies that are off the radar of Wall Street. And that's where the real opportunities lie. Section 8. Beyond Wall Street, tapping into local knowledge. Don't underestimate the power of local knowledge. You have your finger on the pulse of your community. You see which businesses are thriving, which products are flying off the shelves, and which trends are taking hold. Talk to your friends, your neighbors, your colleagues. What are they buying? What are they talking about? You'll be amazed at the insights you can glean from everyday conversations. Remember, investing is not just about numbers on a screen. It's about understanding people, their needs, and their desires. And who better to understand those things than you? Section 9 conclusion, unleash your inner investor. So there you have it. Investing doesn't have to be intimidating. You don't need a fancy degree or a Wall Street address to succeed. You already have everything you need. Trust your instincts, leverage your knowledge, and remember to keep it simple. The stock market is full of opportunities for those willing to look for them. Now go out there and unleash your inner investor.